Hey everyone, Palantir CEO made more surprising comments recently in an interview with Yahoo Finance. Some of you might find it a little surprising, so I wanted to share those comments with you in this video and what it means for Palantir stock investors. Also, I will update my recommendation on Palantir stock, let you know what I think of it. Is it a buy, hold, or sell? I've been keeping a recommendation for Palantir stock for several years now, and that recommendation has been moving more so than most companies because of how volatile Palantir stock price has been. So my recommendation has been changing because the valuation has been changing more so than any other company. So let's take a look at the comments first. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So Palantir CEO saying, this country is focused on using AI to have a structural advantage in how we deploy and understand the battlefield, Karp told Yahoo Finance. And Palantir plays a crucial role in that arena. So two big parts to digest here. Number one is that the country, the US, is playing a large role in using artificial intelligence on the battlefield. And then Palantir's role in that is vital in that arena. It's crucial in that arena. And that's been the trend I've been talking about lately that Palantir is benefiting from. The US military, the budget is massive, right? But more so lately, it's been shifting more of that budget to software. But it still makes a small percentage of the overall budget. It's mostly hardware, right? Physical things. And so now it's moving more so to software. Software is increasing within that budget, and that's helping Palantir grow within that business. Now, whether or not you agree or disagree with Palantir's involvement in the military and its role it plays, that's a question for another video. That's another matter to discuss. This is just discussing Palantir's business in terms of revenue and sales and profit and the prospects for the company going forward. And Palantir CEO saying that those trends within the US military are helping facilitate growth for Palantir. So Alex Karp emphasized that its relationship with the US government continues. And the US Department of Defense recently disclosed a 5-year, $480 million contract with Palantir for Project Maven, and that's a smart system that will provide warfighters and intelligence analysts with faster and more accurate information on the battlefield, such as identifying enemy targets. So there is strong evidence of Palantir gaining the trust and the business of the US government, hundreds of millions of dollars in contract, if not billions of dollars by this point in contracts for Palantir from the US military. However, it's this other side of the business that has most investors, including myself, more excited about Palantir stock, not the government side of the business. And that is the US commercial side of Palantir's business. That business grew by 40% year over year in its most recent quarter, and its US commercial count grew by 69% year over year, and the remaining deal value grew by 74% year over year. Much faster than the 21% growth the company experienced overall. This is the business that I would be excited about if I was a Palantir stock investor, because this has a bigger opportunity. There are only so many governments Palantir can gain contracts from. There's only certain budgets within the government that Palantir can gain contracts from. There's a broader and wider opportunity for Palantir in business than there is for Palantir with government. Now, the government is the core. That's what allows Palantir, and that's what's allowed Palantir to expand from that, right? Because businesses look at Palantir and say, well, if the US military is trusting Palantir with their hundreds of millions of dollars, if not billions of dollars in contracts, maybe we should give Palantir a shot. Let's see what they can do with our data. Let's see how they can enhance our business. And that gets them the foot in the door. And then once businesses see what Palantir can do, they say, oh, so there was something to this. And then they sign up with Palantir, they purchase the services. So Palantir undoubtedly is the best-in-class service in this category. The problem has been the price and the affordability. It's very expensive. You can see here, even though commercial count grew by 69%, it was only up to 262 customers. Only 262 US businesses hire Palantir for its services. even though it's the best, right? Very few people will argue against the fact that Palantir is the best in class in this category. So why aren't more businesses buying Palantir services? It's the price. It's not affordable. Not everyone can afford it. Just like, maybe Ferrari is the best car. Everyone would want one, but not everyone can afford one. It's very expensive. It's only for the select few who can afford it. And that's where Palantir is. But the progress Palantir has been making is making its services more accessible. One way it's been doing that is with these boot camps where Palantir goes into a business and demonstrates what it can do, and therefore gives business more confidence to pay these high prices for its service because it demonstrates the value. So then it becomes more palatable because businesses can see what they're going to get in return. They see the service as less risky, so they're willing to pay those premium prices for Palantir service because they become more confident that they will get a good return on their investment. They'll get their money's worth. So they're willing to spend that money if they're more confident they're going to get their money's worth. And Palantir hasn't been offering their services at cutthroat, very low prices. They could lower their prices significantly to gain market share, to gain broader adoption, but they're not doing that. They've been focusing on profitability lately, and you can see this. Their operating profit margin is now positive, 8.43%, after several years, several decades, even almost 2 decades of being negative on the bottom line. They've now reached profitability for several consecutive quarters, and they forecast they will continue being profitable going forward. Now, Palantir's stock price is not cheap. It's trading at a forward price to earnings ratio of 59.41. And it fluctuates wildly. And this is the valuation. This is not the stock price, right? This is Palantir's forward price to earnings ratio. This has fluctuated from around 40 all the way up over 70. And this is just in the last year. And so the valuation, like the stock price, has been volatile. And so for that reason, my recommendation has shifted. I've had Palantir stock rated as a buy. I've had it rated as a hold. And most recently, I upgraded it to a borderline buy, and I made that recommendation on May 29th. So, like I said, I would update this recommendation, and I'm keeping Palantir stock rated as a borderline or on the borderline, mainly because of the valuation. Like I mentioned, it's expensive. A forward price to earnings of 59 for a company growing revenue at 20%. It's getting stretched, right? I still like the growth in terms of profits and cash flow, growth in the revenue, growth in the commercial business, its competitive advantages. I like all of that, and that's why I have it on the borderline. It's just the valuation is getting a little pricey. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.